and welcome to the April market update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. I am very, very happy to say, after 2 bad months, we actually had a great month. I could say 2 steps backward and 1 huge step forward, but that doesn't do justice to what happened here. U.S. markets were up about 7% across the board. That brought the big cap markets, the S&P and the Dow, back into positive territory for the year. And the NASDAQ also was strong, but is still down a bit for the year, but that's okay because it's moving in the right direction. Even foreign markets did well. In Europe and the other developed markets, for example, they were up about 7% as well. Again, still down for the quarter and the year, but moving in the right direction. Emerging markets bounced back in an even bigger way. They were up almost 13% for the month. It's hard to express just how big a bounce back that is. But I will say this, it's something we have not seen much, if at all. Now the question we have to ask ourselves, especially after the last 2 bad months, is what happened? I would argue confidence has come back. We've seen worries turn to confidence again, and it's brought us back to where we were at the end of last year. I mean, let's take a look at those worries. The biggest was oil. Oil collapsed, prices were down. There was suspicion that it was going to zero because the world economy was collapsing. Instead, we've seen the price of oil bounce back in a healthy way. Not bad enough to damage the economy, but enough to suggest that yes, this is not a harbinger of economic collapse. This is actually a normal market doing something normal and nothing to worry about that much. We've seen the same thing with the dollar. The dollar spiked up, hurt the emerging markets more than anything, hurt developed markets, due largely to policy divergence between the Fed and other central banks. So what's happened since then? First of all, the dollar has started to drift down. In other words, all of that damage that was done, it's not totally gone, but it's moving in the right direction. Second of all, central banks are taking policy actions that actually support their economies. The Fed is doing the same thing, which brings us to the final point, which is there was a real worry about the U.S. economic slowdown. Now, we did see a slowdown, but the Fed has actually said they're going to continue to be more stimulative than the market thought they were, and that's actually helped a lot. We've also seen very strong economic reports suggesting that, again, despite the slowdown, the U.S. economy continues to do quite well. So let's sum this up. We saw a collapse in confidence in the first 2 months of the year, and confidence came back with a bang this month. That return of confidence was based on actually good information, good policy information from the central banks, continued stimulus from the Fed, and continued strong employment growth. What does that mean going forward? We'll have to wait and see, but we do have relatively strong fundamentals, and we've had a test of confidence which suggests that maybe going forward things will continue to do well. I'll talk to you next month.